Wow, you better buckle up because there's a recession hitting in next 9 months and stocks in the US are pretty overvalued. In fact, right around the world. This is not just according to any economist, this is according to Jeffrey Gundlach, a billionaire investor himself. So, do you think his words are to be trusted? Okay, if you've been following me, you know that I have been warning for quite a while now as well that the US and the world economy is likely sliding into a recession and that US stocks are overextended as well. Why is this? Even though all these articles out there, all this media like Bloomberg, Wall Street Journal, CNBC, they're all telling us that recession is not likely. And in fact, the Federal Reserve and the US Treasury, Janet Yellen, they're all saying this is going to be a soft landing. I'm one of the few guys, and Jeffrey Gundlach, out there telling you that most likely it's not going to be a soft landing, and there's a very good reason why. Because when the media, when everyone else is telling you that it's going to be a soft landing, there's not going to be a recession, then it's time to bet against them. See, here is a count of when media like Bloomberg, right, reports about recession. That's the red line. If there's a lot of articles containing the word recession, then we'll have a big spike in the red line. And here, the black line, these black lines are a count of the number of media articles saying the word soft landing. And what happens every time, right? Around the dot-com crash of 2000, there's a big spike in number of articles in black, which is saying soft landing. But then, of course, recession comes and you see a spike in red, which is articles on recession. They're Monday morning quarterbacking. They're always too late. Again, in 2008, 2009, right? We see a massive spike in black line, which is articles saying it's a soft landing. And then, of course, recession comes. And then we're followed by a huge spike in the red line, right, where recession becomes the main theme of these articles. It happened again, right, just recently. So we basically now are seeing a massive spike in black lines. In fact, more than 2007, more than the year 2000. What that means is basically there are a lot of articles right now saying there's going to be a soft landing. And then we're possibly going to see a huge spike in the red line, which means there's going to be a spike in recession. In other words, if we go by historical precedents, right, these media articles and these economists tend to get it wrong all the time. If the majority's consensus between these guys is that we're going to avoid a recession, then I would strongly bet that we are going to get into a recession. Why is that? Why do we think this time they're going to get it wrong once again? That is because, see, the Federal Reserve uses very bad measurement of inflation. See, they use the green line, right, which is what they call the CPI. And they use a very stupid measure of rent inflation, right? If we used true market rent inflation from, places like Zillow.com, we can see true inflation is the orange line, which has gone up further than they thought it would, and it's come down a lot harder, right? Overall inflation, a lot lower than where they think it is. Now we know that the Federal Reserve uses lagged and delayed data on inflation because they use the wrong rent measures, right? So they're likely to keep hiking or keep rates too high for too long, which will eventually cause a recession and a stock market crash sometime next year. Follow Pablo for